We had Fed minutes today, and the minutes painted a picture that everything might not be as good as we hoped. Or maybe things might start dropping a little bit more. However, overall, the trend still appears to be intact and bullish. However, you have to be able to look at the market from a day trader's perspective. Sometimes we're talking about the Nasdaq 100 and the S&P 500. So that's what we're attacking today. Exactly these levels in a few stocks that I believe have very big opportunity. Let's get to it. Okay, so the first thing we're looking at here is the Nasdaq. And something that I've been talking about a lot of the Nasdaq is the 16.6 level. And we kind of pinned here all day long. Here's the hourly chart so you can see. We spent most of the day underneath from 7 a.m., an hour before market open, just rejecting, and slowly coming down. Fed minutes release, we retest, and then ultimately coming back down. Now, if you're not following on Twitter, I recommend doing so you can see all these levels in real time and a few of the stock names that I am watching as well. Now, giving you a better visual, something I mentioned as well. So the next level is 16.4, but in my opinion, you have, this could get treacherous pretty soon as far as in the short term, right? So again, next level after 16.4, you're looking around 16.2 to 16.1 overall. Now, again, the next one we're going to look at is SPY. So Nasdaq, we already have that. We're looking here. And SPY ES in particular have been lagging the market, in my opinion, right? So as you look at SPY, like you're clearly holding a lot of these levels. You have look way better, way better, right? Dow's holding way better as well. So it's like Dow's holding the best, SPY holding mid, and then Nasdaq doing the worst right now. And you have to assume that based on the past year, you're going to follow what the Nasdaq does. Okay, so when we look at SPY, what are we looking at? So if I'm looking here for downside continuation, I want to see a break and hold of this level right here, around 468.8. You break, retest, and push down to 465 roughly. That's your target there. Okay, for Qs, the Nasdaq, it's pretty simple as well. We wanted to see a break of the $400 level, 399 roughly. You broke below, and now you're looking towards 396.6, then 394.8, and then down to 393. Those are your levels intact. They'll also be on Twitter, so you can check that out. But also, too, I have to ask you to do two things. Consider liking and subscribing. Helps out tons. I appreciate all of the support. Let's keep on going. Now, let's also bring in some of these levels as well. You can see here on Chart Prime. So we go to our Chart Prime levels as well, and you can see, right? It's just not optimistic. It's not optimistic, right? You can see that we're just not getting too much of anything. You see the liquidity zone kind of forming out here, but again, we're pretty illiquid to the downside as well. So when we're looking at the charts, there's a few things that we just know, right? We're breaking through some major points. Now, the one thing I want to highlight, and I think I get kind of like a little bit of flack here for, is I love trading the trend, right? So the underlying trend on the weekly and daily continues to point to upside. Right, we haven't made a lower low yet. We haven't put in a lower high. Those are things to consider. We actually put in a new all-time high, right? So looking at those things, that's what we're looking at. Now, shorter term, as a day trader, you have to recognize when you're getting retracements. And I don't always like trading those retracements, but sometimes you're getting good opportunities. And so when we look at the next few stocks, I just want you to understand the picture that I'm painting here. I'll also go over what's happening with FOMC minutes and how that's moving markets. Because what we saw from that was an initial reaction, right? We saw DXY and the 30-year yield drop almost instantly once Fed minutes were released. But it's important to understand, right? What are Fed minutes? Okay. All Fed minutes are, or take this for instance. It's like if I release a video to you here at 4 o'clock, 5 o'clock, right? And then at midnight, I release a transcript of everything I said. That's all Fed minutes are. So we already know what was said at the Fed meeting. Like nothing changed there. I mean, really, it's just reaffirming some of the thesis that they're in a restrictive enough territory. They plan on staying here for some time, which is, again, why I say the minimum amount of time before they even cut rates is summer, right? Which didn't necessarily help what happened with the DXY and yields, which is why I believe downside in the short term is more likely until the Fed comes back, until Powell comes back and gives his opinion regarding deflation and what's happening with yields, and most likely what's going to happen with the housing market. Because Fed Barkin said something today as well. He already pointed to you most likely are going to see a little pickup in the housing market and the housing economy very soon based on what's happening with falling yields and how that's affecting mortgage rates there as well. So it's important to realize that the Fed is already acknowledging what's happening there. Okay, so those are things that we have to attack and visualize also. Just the dollar, and we look at the dollar, there's a few things we need to, just point out here, right? Let me point this level out right here. You could argue your level right here. Honestly, this would be your really big level, like right here. But anyways, so what happened? If you've been looking basically since, Tuesday, we talked about literally yesterday's video. We said the ascending triangle had played out there. And then basically you've seen the same thing kind of happen. Into like Asia's market open, we're kind of flat. And then London and America's market open is where you see a lot of the pain happen on the market and where you see the DXY get a lot of love. So from London's open at 2 a.m. in the morning and then basically 8 a.m. for US markets, you went up a lot. You had some cool off from FOMC minutes, like I mentioned, but again, you saw what happened there. For instance, we go to Qs to paint a visual. You get the initial little pop, and we go to something like the hourly so you can see, you get the bounce, right? And then you quickly reject, which in my opinion shows that markets are they didn't get enough, essentially. And we're not fully priced in their opinions on the dollar and the yield with what's happening with BRICS and what's happening there. Okay, that's very important to realize. Also, too, guys, just to give you a visual, when you're on my live streams and you see these indicators that are down here, the buying, the selling, everything like that, right? To give you a visual, all these indicators are on Chart Prime, and that is built into TradingView. The link for that is down below, so make sure you check them out. The liquidity levels, all things like that. So I want that to be, pretty clear here, right? So jumping back down, right? The 30-year yield, right? The 30-year, this is what we were concerned about, right? Last night, that you broke up, you came down and retested, and then this morning you shot back up. That was concerning, but again, you had the yields did drop again. That's very important to realize. When Barkin made his comment, and then again, they started dropping when Fed minutes were released. So that is a promising thing in the market, okay? That is promising. But in order for me to believe that we're done dropping, I need to see yields stop. I need to see them start going back down, preferably below 4% is where I get really bullish. Again, you already know that. I need to see the dollar top out as well. Okay. Now I will comment on oil getting the bounce here. Oil has been very bearish. The only reason you bounce here is because the United States announced that they are purchasing for the SPR reserves, I believe 3 million barrels, which are set to go through by April 30th when that transaction should be completed. So make sure you're looking out for that. Okay, so number one is going to be AVGO. This is one of my favorite plays. I mentioned this on Twitter. You can go check it out. I mentioned it yesterday. So I'm looking for AVGO to hold below basically 1062, 1060. You hold below this, and I'm very, very bearish. Now, this is hold below even right here, like 1058, which is kind of where you're holding right here, right? So you want to see the breakdown below. But I'm going to show you something here, right? And this is what I want to talk about. It's because the same things I look for the upside are the same things I look for the downside. Okay, I want to make that abundantly clear so you know. So I'm going to take the VPVR so you can see. And as you look, below 1056, 1055 roughly, you get very illiquid quickly into 1035 and then back down towards 1,000. Okay, extremely illiquid. Okay, so if you start dropping here, it's going to happen quick. So I am not a fool. I can recognize some of these opportunities. Now, I wasn't going short at the top. I'm just waiting for the opportunities to come to me. I always want to say that. You don't take from the market. The market gives you opportunities and you take what it gives you. When you start to take things that aren't there, that's when you start getting really risky, and that's when you start losing a lot of money from my personal experience, right? Number two, Microsoft. This is a good example as well. Microsoft has been holding our key level. But if Microsoft loses this level, the key level right here on 366, 360, like 5 locally right there, make sure we're not adjusted. Go back to non-adjusted. Go back to there. It's like 366.7, right? You lose that level, you're going to be in a world of pain. Now, giving you a visual. Again, understanding the liquidity. What's happening here? Go back. Look, you get below 365, you're pretty liquid back down towards 350. Now, there's a few levels. You have a liquidity level here mentioned on Chart Prime back at 360. But again, it's going to be ugly. It's going to be quick, and you can start getting your legs kicked in. Again, this all ties back into NQ, believing that you have almost 400 points of downside if you start losing some of these major levels. So again, I am not a fool. I am not running and just gunning and taking a bunch of risk. I'm waiting for these things to play out before I start to jump in and get hyper aggressive, right? You have to be paid. I say it all the time. Let the opportunities come to you. People like to get mad and like when I just post my trades. I don't understand, but you have to understand what I'm looking at. I try to paint this in the most easy and simple way for people to visualize. One more thing. So going into something like coin Coinbase, right? A lot of you guys are curious about Bitcoin stocks and things like that. Coinbase is a very simple name for me. When I look at Coinbase, the main level that I had been watching was right here. It was right here. This was your major key level, 10 or 150. Okay. AVGO is my favorite short setup. I want to be really clear to you. But Coinbase, I don't want to go short on Coinbase. But if I was, and I know a lot of you guys want to, okay, I would be waiting for a retest of 150, and then I break down. That's what I'd be looking for. I want to be abundantly clear. That's what I would look for. I know a lot of you guys have a lot of questions on this one. Watch it closely. Tesla. Looking at Tesla. I made a joke earlier in Discord. I think it was yesterday. It's playing with hell because now you're back in this abysmal box. And J Ream was calling this thing out in Discord like crazy. If you caught the newsletter, a lot of stuff in there as well. You broke back below 246, and from there, like we mentioned this as well. You were flirting with this. Boom. Instantaneous drop to 238, getting really gross. You could come all the way back down to 232, the bottom of that box as well. So again, nothing's necessarily safe. Be very careful. The only stock that I like to the upside right now is still Walmart. You have the inverse head and shoulders playing out here. You're trying to mount that neckline. Again, it still looks decent. And if you're going net short on a lot of things, I think Walmart is a decent hedge to the upside. You have a target number 1 of 163. Target number 2 with the gap fill is right here at 167. That's what I'd be looking at. Walmart looks phenomenal. Names like Target, Walmart are pretty much holding up pretty decently. The only name that looks kind of like semi-bad is Costco, but it's run up so much. It's like sitting at all-time highs. You know, Walmart, Target, not near all-time highs right now. Food for thought. So those are the names I'm watching. That's how I'm trading this. Make sure you're paying close attention. I just want to leave you with a few things before I let you out here. And if you want to dip, you can dip. Now, when we're looking at this action, I want to be like abundantly clear. I am not taking a lot of trades. Okay, I am not. I don't know how else to say it. When we're moving opposite to the longer-term trend, you got to say it real slow because some people like lose their minds, right? When we're moving opposite to the long-term trend, I take a lot less trades. The only trades I take are high-value opportunities like AVGO that has almost 60 points of downside that could happen quick. Like Microsoft if it breaks that massive key level. I am not interested in small, tiny scalps. That is not where I'm going to make my money. I am not going to trade pennies in a small pullback, retracement, slow movement. That is not where I'm going to make my money. Are we clear? Does that make logical? I'm trying to make this really understandable. As a day trader, over trading is the number one reason why people lose money, in my opinion. You just take a crazy trade. You don't understand why you're taking it. You don't even see value. You just see pretty lights and you want to be in the party. Okay. Now, if that was you, have fun. Let me know how it goes. Please comment on Twitter. I would love to know how that goes. But at the end of the day, you have to be willing to protect your capital. And most of the time, the way you protect it is through patience and understanding where your opportunity lies. That's the number one thing I can say to anybody. If you have questions, comment down below. I'll see you guys tomorrow. We'll also be live every day, 10 a.m. Central. We've had a lot of you guys in there lately, so continue to tap in.